Just give it a few more minutes. I'll probably really start delving into the content at, we'll do 5:35. Should be fun though. I don't have, oh, thank you, too much of a plan for today. We're just going to try to build a portfolio based off of a small account. Um, During a time like this, and we can hopefully see by the end of the semester if we've made or lost money, um, and kind of maybe where our opportunities or challenges were, which I think is important. Hopefully everyone's doing okay. All the classes seem to have done a decent transition into the online format this week. I mean, it's not ideal. It's a little stressful, but um, I think so far all my professors have done a pretty good job taking stats online currently, and that's an experience. Part of me prefers that, but the other part of me kind of wishes I was actually there, despite the drive. 5 people watching. I think I am all in 3 of them. So to the 2 of you who are here, hello, thank you. 6, 3 of you here now, yes. Thank you. I am popular. Coronavirus has made many people work from home, so I obviously picked up Twitch streaming. I'm one of those people now. I'm kidding. I do this the once a week for FA. Although it's fun so far, and I think I'm getting better at the I don't know, just kind of the layout using the software that you have to use, which is interesting. I think it's good to allow me to make videos and edit them if I wanted to, which I might do in the future. All right, let me just post in the group me before I start to look at some cool stuff that we are started. Okay, we are. I'm gonna do my best to keep up with the group me chat. The Twitch chat is a better method to ask a question, just because I only have so many screens to go back and forth, and because I don't know how to make the laptop I'm streaming on do everything that it needs to do. It's just it's a mirror of my screen, so I can't look at chats or direct messages without everyone being able to see it. So I have to use a couple different screens here. I'm just trying to prop this. That doesn't work. Okay. That was me clearing my throat. I'm not infected. A couple more minutes. We'll be on our way. I'm hoping today goes really well. I'm going to talk for hopefully about an hour. It really just kind of depends on if people have questions, or if I feel like I've gone through enough content. It may go a little under, may go a little over. But I know I just found out that they're having, I guess, that PES thing right at the same time. So I don't know how many people that's impacting. I figured nothing would be going on, but I suppose that's naive, especially with the folks that are in the selling program, right? You never stop selling. So I don't know what else is going on with other organizations or classes or other UH events. Hopefully this is at an appropriate time. From now on, they'll be on Tuesdays at the same time, 5:30 to 6:30. It was just a Wednesday this time. I had something going on yesterday. I was unable to do it at the same time. that the normal RNTs are done at. And additionally, all of these RNTs that will be online from here on out should hopefully be available for review later. I think I'm going to try to import that video somehow and then cut it up to be a little bit more palatable. But we'll see. Why is that paused? So before I begin and start getting into the risk disclosure, does anyone have any questions for me so far? And I guess I'll start talking about the risk disclosure if y'all want to start typing. So anyway, everything that we're doing here today is for educational purposes. So any investment strategy or particular investment is not a recommendation or endorsement. Past performance does not indicate or guarantee future success. Everything we discuss in here is hypothetical. And then all returns on investments will involve risks, including the loss of the initial principal. All that said is if you follow our advice here and then you wind up losing money, we are not liable, don't sue me or the Finance Association, and take everything with a grain of salt. Do your own research and understand your own risk tolerance as it comes to each individual investment. So I know not everyone is going to be able to see that. People will join later, but I guess there's not much I can do about that. So we will move on. Again, if you have a question at any point, feel free to ask either in the chat or in the GroupMe. I'm trying to check the GroupMe more often this time. I missed a couple of questions last time. So without further ado, let us go ahead and get started. So what we have here today is we're going to actually go over an account, a simulated paper trading account for a smaller portfolio. So if we can see up here in this left-hand corner, this, by the way, is TD Ameritrade's Thinkorswim platform. It is the platform that I use in my personal trading, so I figured I should probably use something I know a little bit better than other platforms. I can probably convey information more accurately. So again, I'm using TD Ameritrade's Thinkorswim platform. I do use some third-party software every once in a while to source some data. I don't think I'll be looking into any of that today. If you have questions about that, feel free to ask me either during the stream or after, whatever you feel is appropriate. So again, we have right up here, I've set the cash value to $10,000. So I wanted to kind of simulate a smaller account. Some of you might think, oh man, 10 grand, that's still a bunch of money. And it is a lot of money. Every 10-15 minutes or so, and I have to turn it back on to get the audio. So if I just suddenly stop talking, forgive me. I'm turning the microphone back on, wireless microphone. Anyway, so 10 grand is a lot of money. However, in the scheme of things, when you look at trading, it's very attainable even for people who are college students. So right now we have just 10 grand even. We have no positions. What we want to do today is we actually want to build a portfolio. You want to say, hey, I have $10,000 to invest. Right now the market's down, right? We're taking this huge drop. How can I leverage that in my favor? Or how can I build a portfolio now in my favor? So we're going to do a couple examples of that, make a few trades. Unfortunately for us, the market is closed, been closed for about 2.5 hours now. So I won't be able to actually have the trades go through. So what's going to wind up happening is we're going to make a ton of trades today based off of the current market price. So I'm going to do limit orders just to make sure I lock in the price that we discussed today. And then hopefully by next time, all of those orders have filled and we can kind of see how our portfolio is behaving. So one of the first things we want to do is we want to ask ourselves, hey, what kind of portfolio do we want to have? What's our risk tolerance? I'm going to go ahead and say, just because we're all very young, or at least most of us probably are, that we have a higher risk tolerance with our portfolio because we have time on our side. One of the things that I constantly discuss in the RNTs and in the last live stream is that the more time you have on your side, the longer you have to kind of wait out these events. Now, the coronavirus is interesting. Obviously, nothing like that has happened in modern history, especially to the magnitude that it is internationally. Um, and right now, we're just seeing the effects of speculated slowdown within the economy. We have no idea what that has actually done to things like the job report, to things like the revenue, the GDP, the revenue of companies, or the GDP of the United States, or even other countries who are major importers from the United States. So there's a lot of factors at play here, and so far a lot of it is just estimation, just forecasting, and that's really when we're going to start to see how the market's going to behave. Is when we get that next jobs report, when we get that next these next economic reports, is we'll see these transfers of sentiment. I don't know the number off the top of my head. It would be an easy Google search to find, hey, how much do we think the jobless report is going to be? Because I believe it was at like 2 or 4% or something like that. And there's been speculation that it's going to go as high as 20. So whatever this kind of mean analyst speculation is going to be, that's typically what the market's betting on. And if it goes under that, then that's great news. It's less unemployment than we thought. We might see a rise in certain indices like the S&P 500 or the Dow Jones. And then on the inverse of that, if we see that number being, hey, 25% unemployment, if we thought the mean of 20 was the target, which is a little ridiculous. I don't think it's going to be nearly that high. That's a ton of unemployment. But anyway, seeing that number higher than we had anticipated, we might see a sharp downturn in the indices, the S&P, the Dow, etc. So these are the types of things we want to keep in mind. But again, I'm going to go for a more aggressive portfolio here, saying that we are on the time is on our side. So we can go ahead and make this decision, and even if we're wrong in the short term, in the long term, we can anticipate the market will continue to go up. So with $10,000, one of the first things that I'm going to decide is how much do I want to allocate to stocks, how much do I want to allocate to bonds, and how much do I want to keep in cash. And then you can also add on to that alternative investments. There was a couple pie charts. Let me actually pull it up. Let me see. I think it was in the first RNT, just for illustrative purposes. Yeah, this serves the purpose I'm looking for. So right here, we kind of have the stocks, bonds, alternatives, and cash. So this is basically what I'm talking about right here. What do we want our portfolio breakdown to be? Do we want it to be like this? Do we want it to be 60% stocks, the 30% bonds, 5% cash, and 5% alternatives? Alternatives being things like options and futures, forex, other investment vehicles. For the sake of simplicity and the sake of practicality, for how I started investing and how many of my peers have started investing, we're going to mainly just stick with stocks and cash. Personally, right now, I am a huge believer against bonds, mainly because bond yields have dropped so low despite stocks going so low, right? Usually they have an inverse relationship, but bonds are still very low. The Fed keeps cutting rates. So for the sake of our portfolio, I'm not going to include any bonds. But bonds, by and large, are much safer than stocks. So if the risk tolerance is not very high for you, bonds is maybe something you want to consider. But for the sake of this portfolio, again, we're just going to do alternatives, stocks, and cash. So like the chart I just showed, we're going to go ahead and keep 5% of our portfolio in cash. We're going to keep 10% in alternatives, and we're going to do the other 85% in stocks. So that's pretty simple math, because why we have 10K. So $8,500 is going to go to stocks. One of the first things that I want to do, and I need to actually calculate some of this out here. Grab my pen and my calculator. Is we want to decide our positions for stocks. Now, I'm a huge advocate, especially in these kind of long-term plays, of finding a mutual fund or an ETF that tracks the S&P. The S&P has been one of the most reliable forms of return on investment since the dawn of the US stock market. So there are other avenues to make us a ton of money in the short term, but this is the most reliable over the long term. And it's down. We can argue that we're buying it at a discount. Again, I'm not exactly sure what's going to happen in the coming months as it relates to the virus and the economic news, so it very well may continue to go down. But right here I have the stock ticker IVV. iShares Trust Core S&P 500. It's an ETF, one of those low-cost, passively managed ETFs that just simply tracks this S&P, tracks the S&P 500, and that's exactly what I want. And I want a bunch of this. I want the majority of my portfolio to reflect the market as a whole. Why? Because it diversifies me. I'm not worried too much about company-specific news or even sector-specific news to a large extent because the entire market is encompassed in the S&P 500. I'm really just worried about the financial condition of the United States. And since I live in the United States, if the financial condition ever deteriorates to the point where I don't think the S&P 500 ETFs or the S&P 500 as a whole will do well for me, then I have much bigger problems than losing return on my investment. So we have this ETF right here. Right away, I'm going to put 25% of my portfolio into this IVV, this S&P 500 ETF. We're going to go to trade here. And if y'all don't understand what I'm doing with this platform Thinkorswim, it is very complicated. And if you have specific questions, feel free to ask me. I'm not going to spend too much time talking about it because it is very, very in-depth. So just kind of get the gist of what we're going at here right now, which is buying shares right here. So I have this buy ribbon right here. It automatically just goes out to 100 shares for me. But we are going to do... There we go, hold on, dollars. And that's just the investment amount I want to put in. And this is how I almost always invest in my actual account, is through dollars investing. So if it's 5% of my portfolio, or in this case, 25% of my portfolio, $2,500, then I put in $2,500 right here, right there, and we want to buy it at limit right now. So that means it's going to only ever execute this at $247.77 per share or better. If I were to switch this to market tomorrow morning, it would just buy it at whatever the market said it was. So if this stock went down, or up rather, $100, right? So a huge number, it would still try to buy $2,500 worth of it, which might be okay considering I'm doing a dollar amount of invested capital and not number of shares. But for all intents and purposes, we're going to do a limit order. So we get our limit order here of about $250. We're going to go over, change from day here to GTC, which means good till canceled. And just for everyone's information, this extended right here, EXT, just means extended hours. And then GTC _ extended EXT just means good till canceled, including extended hours. So if you're a trader, which I am not, who likes to trade during the market being closed, the extended hours, either the pre-market or the post-market, that might be something you're interested in. It's just very volatile, not for me, I don't do it. So with that being said, we're just going to do GTC here and exchange best. This is something you'll most likely never, ever, ever need to change. Most brokers ask you this question: which exchange would you like to trade on? These are for arbitrage plays. If you don't know what that is, that's fine. It's very institutional, and you don't need to know. If you're a finance major or something similar, you'll probably learn later. So anyway, we have our trade here. We have our buy order, right? 2,500 ETF of IVV, which is an S&P ETF. So we're going to click confirm and send, and it's going to bring up this little window right here, and we're going to talk more about what's actually happening. So it just says the cost of the trade. It's going to wind up costing me about $24.77.7 in cash. Now this is a margin enabled account, so it does say a buying power effect here is smaller. Ignore that for now, and some other data here that we don't necessarily need to know. So anyway, we are going to go ahead and click send. It's been triggered. So it's trying to buy that right now, and it's good till canceled. So if I go back over here to monitor and working orders, we can see that it's trying to do that right now. And then tomorrow morning, we'll find out if it's successful or not. So we just spent 25% of our allocated dollars onto this new portfolio venture. Now, what do we want to buy? So we have this. This is our safe bet. This is a large percentage of our portfolio that we will anticipate over the long term will be fine. Now, one of the things I want to do, and let me look up the symbol real quick. I have it in my personal portfolio. Let's see right here. It tracks the Russell 2000. So while the S&P 500 tracks the top 500 performing companies within the United States, the Russell 2000 focuses more on the small and mid-cap stocks, the smaller businesses that are publicly traded within the U.S. This typically has a little bit more of a greater risk associated with it. Why? Because smaller companies or mid-sized companies are more volatile or less of a sure bet, if you will, than a large company, say Apple, Google, Microsoft, etc. So let me pull this up. I want to get the right one. A lot of them should have been up quite a bit today. It's MDY. Yeah, MDY works. So we're going to go to charts because I want to go ahead and view the chart first. This ticker is going to be MDY. It's going to pull it up right here. This is a mid-cap 400 ETF. So this is going to be focusing on mid-sized companies. Again, riskier for the same reason. Mid-sized companies are less of a sure bet than the larger companies, the blue chip stocks, your Apple, Microsoft, etc. Although it does seem to be following the trend of the market recently, with these past 2 days being up quite a bit. But let's go ahead and actually quantify that. So we're going to do a quick study here. I'm going to compare it with the S&P. So this is just the S&P compared to MDY here, which is this mid-cap 400. And we can just kind of see how they relate to each other over time and the general movements of their stock prices. And they're virtually identical in the way they go up and down together. I know these price discrepancies make that look a little weird, but it's suffice to say they follow each other very closely. So MDY is something that I would like to include in my portfolio. This is something that I see because it's a little bit smaller, a little bit more volatile, but still well diversified, might bring me a little bit greater return on my investment than the S&P 500. Anyway, so this might see a little bit greater return because I'm taking on a greater risk. So with that being said, I'm going to go ahead and put 10% of my portfolio into this position, into MDY here, being $1,000, right? So we're going to go again to trade. It's going to automatically take MDY for me. I'm going to go right over here to buy. Brings up the same thing, this buy ribbon right here. I'm going to change that over to dollar amounts. We're just going to type a 10 to make it 1,000. MDY ETF. We're going to lock in that price right there. So right now it's trading at that 253.01, and that's what I want to buy this stock at. So it is a limit order, and we want to change it till good till canceled. And the reason that is, by the way, if I were to put this today, it would automatically fill and reject. Actually, let's try it. I'm pretty sure that's what's about to happen. Triggered. Monitor. Oh, it's still working. I'm not sure if it'll close out tomorrow or not, but we're going to go ahead and make sure it doesn't do that. So I'm going to replace it. We're going to go good till cancel, confirm and send. So we can see the resultant effect of buying power. Now this is actually a good area to stop and think about what to do. So I said that I was going to put 10% of this $10,000 portfolio into this stock. That comes out to be $1,000. If I put that $1,000 number in here, which is what that was, which will let me change now. Interesting. I think it's because it's a resend. But anyway, 4 of these would be greater than $1,000, so it didn't do it. It went to 3. But it's not too much over, so I'm going to go ahead and up it. Nope, not to 103. Those are intervals of 100. To 4, it's going to be a little bit over $1,000 by a couple dollars. That doesn't bother me. It's personally all right with me and my risk tolerance. So now we can see it's $1,012, $12.04 over my original intended investment amount. Now, if that's something that I just don't want to put over $1,000 into it, that's absolutely no way. That's fine. I just take it back down to 3. Except now I'm only buying about $700 and something worth of this stock, which is important to think about. So we're gonna go ahead and send this order, and all that did was just cancel that last one I sent and replace it. So now we see we have 2 orders right here. All these canceled ones. So we have the 2 orders right here, MDY, which is that mid cap, and then we have IVV, which is going to be the S&P 500 as a whole. So far, we have extended $3,500 worth of our investment capital into a few positions. Now, I'm not going to be done buying ETFs or these funds just yet, because I'm a firm believer that over the long term, these are what's going to make you the most money. And they're the safest. Again, there are money managers every couple of years, these hedge fund managers who wind up making the right pick 3 or 4 or 5 times in a row and making their clients a ton of money. And that's great. Great for them. Problem is that you can actually attribute a lot of what they're doing over the long term or even the short term to just luck. You flip a coin 50% of the times, it's going to land on heads. You buy or sell a stock 50% of the time, it's going to go up or down. And it is very possible to flip a coin 5 times and get heads all 5 times. The odds of that get slimmer, but it is possible. And then what winds up happening is all these people see this individual or this strategy, and they pour all their money into it. They see the returns. They see the 15, 20, 30% returns, 200% returns, and they throw all their money into these strategies. And what winds up happening is it reverses on them. The coin flips tails. The stock goes down, et cetera, et cetera. You lose a bunch of money. You blow up your account. Right, your savings that you've been working for years and years and years is gone. So that doesn't sit well with me. That's outside my risk tolerance, at least with this much money. So for the majority of my investment is going to be into these larger funds that track the market, that track sectors, that behave in a more, I don't want to say predictable, because predictable is a bad word in my opinion, when you talk about the stock market, because no one can really predict anything. I would say that the past history of the market has always been up for the United States as a whole. So that's what I'm betting my money on. I guess, yeah, you can say I'm predicting that it's going to continue to go up. But again, I refrain from using that word, especially with individual securities or strategies. So anyway, we have our $3,500 or so worth of capital invested here. And last thing I'm going to do is get a little bit riskier while still being diversified. So we have our S&P 500. We have our mid-cap stocks. No one has said anything in the chat so far, which makes me a little sad. And that's okay. I understand. Y'all are probably sick of typing and watching videos, considering we're all online right now. But this would be the point where I ask y'all, what is the next probable investment I'm going to look at? And it's going to be small caps, which let me figure out the symbol that I use for that, which is, see positions, it's not MDY, is it IWM? No, that's my Russell. That's the one I actually meant to do last time. I might be able to just type it in actually. Small. Yeah. These are all 3 times shares. leveraged 3 times, so that's scary. I'm not going to show you all that. I'll just figure it out. Hold on. Figure out a good small cap ETF. Just do a low cost. Yeah, by Schwab. That's what I figured. Let me just get the ticker. CHA. There we go. So this is Charles Schwab small cap stock ETF right here, which is what I'm going to use for this next part. Switch chat again. And same thing. So last time we spent 25% on our safest, most secure bet, and that's going to be the market as a whole. Granted, it went down just a ton a bit ago, but it's not going to go bankrupt. Or if it does, we have much bigger problems. Same thing with the mid cap that we just bought, and then the small cap that we're looking at now. Now, the small cap is going to have the most volatility because the companies within this ETF are more likely to go bankrupt than that of the larger, even the mid cap. That being said, because they're more volatile, that means the revenues are more likely to surprise, go higher than anticipated, and make your returns a little bit greater. But again, you're protected through that diversification a little bit. It's not as serious as just investing into a singular small cap company or even just 3 or 4 or 5. You're getting a large variety here. And these types of ETFs that just track the US small cap market as a whole. So last time we invested 25% to the largest one, and then we went down to 10% for the mid cap. Now I'm adjusting my risk and return right here to how much I'm willing to risk. Accordingly, it's scaling down. That being said, I'm only going to do 5% of my total portfolio right now, which is going to be that $500. So not very much money at all. That being said, we're going to go ahead and trade. We'll switch over here, go to buy, swap this over, and it's right there, already at $500 ETF. Do our limit order, so right there at the $51.40 mark, and then good till canceled, which is important. So, yeah, everything looks good. Exchange best. Yes, not a real trade. And send. Perfect. So now we have over here, we have our 3 working stock orders. 3 of these ETFs right here with a total of $4,000, which is 40% of our portfolio. And now we did mention before that 15% was going to be set aside to cash and alternatives, with 5% being cash, meaning that any given time, I don't think I'm going to use all the capital during this live stream, although I guess I do have a half an hour, but I want to try to go more in depth on a couple different individual stocks or smaller areas to look at. So we're going to do 5% cash and then 10% alternative. Now, the alternative stuff I'm definitely not touching for the sake of this live stream. That's going to be stuff like options, and I will do options. Those of you who are trying to find information on futures or Forex, I can't help you as much. I don't do that in my personal portfolio, and I know not enough about them to talk about them competently, but I can probably, I feel like, show some option strategies that people would like to include, even the smaller counts, to kind of multiply your risk return a little bit with some plays that can either kind of bolster what you have with your stocks or even ETFs or income generation, speculation, stuff like that. So we'll leave that 10% to the alternatives. And 10%, right, that's 10% of our portfolio and the riskiest part of our portfolio. So we are going to be very aggressive with that for those of you who want to see how we can hopefully make a lot of money in the short term. So that being said, we have a decent amount of our portfolio right here into this kind of safer stuff. We're going to move on into what's happening in the market right now and how we might be able to benefit off of that in the short term. So What I would love to do, but I don't think is going to happen, is talk and ask what stocks or companies do you feel like in this moment, due to this virus, due to this pandemic, are going to be outperforming last quarter's revenue compared to, well, I guess compared to last quarter, meaning that they're going to have higher revenue numbers this quarter than they did last quarter. I do want to wait a minute or so to see if anyone has any ideas before I move on. Let me make sure I have GroupMe pulled up. If anyone's asked a question there. Hold on. No. Oh, yes, there we go. Online services such as Netflix, Hulu, etc. Yes. This would be someone that we can think, right, because everyone's staying home. So if you don't have Netflix, you don't have Hulu, and you're sitting at home, right? You have your internet, you have power, you have food, and you wind up watching all of the DVDs you have. What are you likely to do? Sign up for these online streaming services. And what might wind up happening is hundreds of thousands of people who haven't already signed up to, say, Netflix will sign up to Netflix. And after all of this is over, some of them might cancel their accounts. However, it's more likely than not, to me, that people would just keep their subscription. So we're going to look at Netflix. And you were right on the money, because people already are kind of anticipating this. I was looking at Netflix earlier. So we're going to get rid of that. So we're going to look here. Let's look at 20 days. So this is a 20-day chart of Netflix. And we are now considering Netflix for our portfolio. Although I'm gonna back it out a little bit more. So this purple line that represents the S&P is not as clear as I'd like it to be. So we're gonna go out to 180. That's worse. We're gonna do it here, and I'll just zoom in. What program am I using? So this is TD Ameritrade's Thinkorswim platform. It is very, very complex. Please don't be afraid, anyone who's watching, of kind of how much stuff is going on. There's only a few different key fundamental things that I'm focusing on right now that we should be paying attention to. This platform, I would argue, has just about everything you could want as an individual retail trader. But for some people, it's just too much. And they'll switch away to something a little bit more, simplistic. But for me, I like it. And it's the thing I know the best. So that's what I'm currently using for the live stream. But moving on. Here as something we're considering buying. We see this purple line I had put on earlier is going to be a comparison to the S&P 500, so the market as a whole. And we kind of generally see what happened. The market went up right here at the end of February, beginning of March is when we started to see it really go down. And with this little bit of a rebound here over the past 2 days, but people are on the ball with the assumption, hey, Netflix might be going up. That's why it's not nearly as down. And it's kind of interesting because these two candles right here, these last two, represent, represent the last 2 days of trading. I forget, it's not it, it's just click and drag. These last 2 days of trading right here. And the market's been up, but Netflix is down. So we can kind of see that there's this inverse relationship there. Highlight that. This inverse relationship to, let's duplicate, the market down here. So as the market goes up, maybe Netflix goes down because we think, hey, the longer this goes on, the better off Netflix will be. More people are streaming their content, buying memberships, etc. So Netflix is actually down a little bit today. And let's say I'm a firm believer Been down a little bit the past 2 days, almost, well, 4.18%. And I'm a believer that this will actually get a little bit worse before it gets better. So I think Netflix will go up. And I want to buy Netflix at this price right here. So let's go ahead, drawings, and add right here at close. So buy, change this to green. Yes, yes, for good. That's kind of hard to see. Actually, no, they do have a darker green. So we're gonna go ahead and extend activate so we can see it right about there. I'm gonna go ahead and be a buyer of Netflix at about $342 even. It's just what we're gonna say. The program is, I guess it is technically free. I don't pay any money for it, but I have to be a TD Ameritrade client. Although I don't think they have any account minimums or anything like that last I checked. So theoretically, you could sign up for a TD Ameritrade account, put no money in it, and have access to this program, which I think is what some people do. So if that's something you're interested in, and I think you can sign up with TD Ameritrade, just don't give them your bank account info, and you can actually have access to this platform. Although to be fair, if you don't want to go through all of that, a lot of websites will do this. Charting and stuff is very common. Like Yahoo Finance will let you chart like this. Anyway, so I want to go ahead and buy Netflix here at about $342. But now we need to discern how much I want to buy. How much risk am I willing to take for Netflix as a single position within my portfolio? And that's tricky because we want a little bit more of an aggressive portfolio over the long term. I think Netflix will be fine, but we're trying to find these kind of short-term gains. Now we put, our last trade was 5% of our portfolio into the small cap ETF. I'm not going to do as much as 5%. That ETF is meant to be one of the larger positions within my portfolio, but I'm going to run into a problem here because Netflix is so expensive comparatively at $342 a share. If I wanted to only do, say, 2% of my portfolio, I couldn't do that because it would be $200. And I don't have, Netflix is more than $200 a share. So with that being said, we're going to go ahead and kind of, I don't want to say fudge the numbers a little bit, but I do believe Netflix will go up. I do want to include it in my portfolio to see some of that upside. So we're literally just going to buy one share of Netflix, right, which comes out to 3.42% of my portfolio. And that's going to be one of the larger positions that we have. But Netflix is a large stock, right? So over the long term, like some of these ETFs we're buying, we think it's going to be okay. Obviously, there's more risk associated with this, considering if Netflix goes bankrupt, we lose 100% of our investment if we don't sell. Whereas if Netflix goes bankrupt in an ETF that we have, the ETF might go down a little bit, or it may not go down at all. Well, that's not true. If Netflix goes bankrupt, there's big problems. But we won't be out 100% of our investment. So we're going to go ahead and, again, buy right here. We're going to pull this up. Now, I already know I'm just getting one share. So we're going to go in quantity here. I'm just going to swap that to 1. Before we've been doing that dollar amount thing, but there's no need here. So Netflix stock, and I actually I'm going to lock that, and I want to buy this at 342 even. Meaning that this order to buy will not process unless Netflix hits 342. If tomorrow, suddenly, it was at $400 on open, I won't own it. I'll still have this order sitting there trying to buy it at 342, which might be fine. $400 might be too expensive for me as an investor. I don't want to put 4% of my portfolio. Let's say 3.5% of my portfolio is what I'm comfortable with risking. And if it goes to $400, I didn't want to be a buyer anyway. I think it's overvalued for what the market has it at right now. Or at the very least, again, it's outside of my risk tolerance. So we have that 342 locked in, limit, good till canceled. We're going to confirm and send. We'll see right there. Yep, 342 and send. So we just added Netflix as a singular stock to our portfolio. Now, again, none of these have actually been purchased yet because the market's closed. So hopefully tomorrow I'll get on when the market opens at 8:30 our time, Central Time, and see what's gone on. So, does anyone have any other ideas for another company that might outperform, or we can do the inverse of that if anyone has any ideas that might really, really underperform the market considering what's going on right now. I'll give everyone a second if they have any ideas, and we can talk about it. 3M, I think so. I feel like 100%. Let me Google them though. I think at one point they were actually in my portfolio. No, I'm thinking of maybe because of the masks. 3M. No, I don't want to buy stuff from 3M. I want their stock. Okay, so fair enough. It's 3Ms. Who knew, right? So 3M. This has certainly been a company that's kind of taken a wild ride, and it's followed the market. At least down here, we see this kind of big downturn right here. Very much so, kind of trailing what's going on with the market as a whole. So our, I guess you could say, hypothesis here is 3M will outperform next quarter because the virus is increasing their sales of their products in a significant enough way to make this a good buy. That's what we're looking at. However, we need to be sure before we buy that that we have a good understanding of everything that they do in their revenue streams. Netflix is pretty straightforward, right? They have a streaming service and they produce their own content. There's not a lot of sections of their business to look at. 3M, on the other hand, is massive, but in a different way. So we want to actually analyze this company a little bit more. Right, they do make a lot of, like, just seems like everything. So we're going to analyze it a little bit more. We're going to look at the fundamentals of 3M right here. So just a different tab I went to. It's the Analyze tab within Thinkorswim. It's going to pull me some information about their company. So, okay, go away. We have the company profile right here, which is going to be a general overview of what they do. That's a good read. And then we have some financial data down here, and they do have what I want this way. Okay, perfect. So they have some financial data right here, which is important to look at. And yes, we do often look at companies' financial statements to make decisions in a process that usually takes a lot of time, actually. We can actually assess right here. Earnings per share looks like it's been really good, on this uptrend. And then, hey, we don't know what happens in 2019 when it kind of took this $9.18 drop down to this $7.81. We can see that they keep increasing their dividends, which is a good sign. Book value per share has been declining over the past 3 years steadily, with that weird jump right there. So there's probably some news there that we can find out in the 10K. Cash flow per share, free cash flow per share, sales per share. Sales per share has been going up. They might have been engaging in stock buybacks, though, but I'm not exactly sure at this point. Return on equity. So we have a lot of data here. Then we have a couple different metrics down here that we've talked about in past RNTs. So we have our price to earnings, price to book, and then we actually had price to sales ratio, which I know there's sales per share, but no price to sales right here, just price to cash flow, which I guess is actually interchangeable. Anyway, so we can kind of see how it compares. So their current price to earnings is that 18.139 compared to their 5-year average of that 22.2. meaning it's significantly lower. You can argue that if you're a value investor, hey, 3M is trading at a good discount right now. Kind of same thing with these other figures, except price to book value, which this maintaining constant is interesting because their price has gone down, but the value of their company relation to that has stayed the same. And we can see that their dividend yield seems to be at 3.2%, which is up significant amount actually from that 2.6%. So total shares outstanding and their market cap, which is all cool. Then we have right here, this is a ton of good data, stuff you would find in like a 10K to look at. Business value, and I'm not going to go through all this too much, just because this would take a long time for the short amount of time that we have. However, there is one very specific thing that I want to look at, and that's right down here. Now, this doesn't appear for every stock I look at within this platform, but we're fortunate enough that it has now. So this is really breaking down 3M's market cap within their own company as far as what they sell and to whom. So they do have a net debt balance of $18 billion, which is substantial. A lot of the times for larger companies, this is actually a net cash balance, especially if you look at someone like Apple. But we see, okay, they have their consumer goods right here. And this gives a ton of great data, safety and graphics, electronics and energy, healthcare, and industrial. So healthcare is more or less what we're assuming. Healthcare and I think safety, this might not be what you think it is. I think this is like, like radio technology and not like masks or anything, right? So that looks like it would fall in, sterilization, right? So healthcare is what we're assuming is going to be up, right? And that constitutes 24.5% of the total value of 3M, with industrial being the largest, healthcare being the second largest, electronics, energy, safety, graphics, et cetera, et cetera. So what we're really making our decision on here, if we don't, I guess, really delve into like the 10K, is 3M's healthcare sector going to outperform enough to post positive results this coming quarter versus the declines that they'll inevitably face in the industrial side of things, the electronics, the energy, safety, and graphics, and then very, very specifically consumer. And additionally, it's a riskier investment, right, because we have that net debt balance right there of $18 billion. So in times of hardship, you like to look at companies that have a lot of cash on hand, just because they can kind of weather these sharp declines, maybe without going through layoffs or without closing down factories or stores or stuff like that. So anyway, coming back here, what's really good about building a portfolio is having those ideas like, hey, 3M makes a lot of cool stuff that I can see and see out in the world, and hey, it might be a good investment for me right now considering what's going on. And then being able to go in there and look at what's actually happening and how their business is broken down, and then maybe coming to the discovery, hey, while they have this very specific sector that might be outperforming, the downside is greater than that. So 3M might be a company that we stay away from. One of the ones that, probably the last one that I'll look at today, is Costco. And I'm just going to look at the chart to start off with. Now, Costco, right, as we know, is a wholesaler of consumer products. Specifically, it's just a super grocery store, right? We all go buy in bulk there. They're certainly sold out of toilet paper. We know all that cool stuff. So we can kind of see here in the short term, and I have zoomed this in. So this looks like February right here, the end of February, yeah, the 21st. Kind of shot down right here with the market, but been tracking it decently. Zoom a little out, a little further actually. Oh, that's not what I wanted. There we go. So it's been tracking it decently. We can see right here all these dark, or I guess lighter blue lines. These all indicate volume. So there's a lot of people trading Costco right now, which is good for liquidity. And I won't get into liquidity as much right now. But anyway, so let's go ahead and analyze Costco a little bit more. So we're going to go to analyze. We have Costco already pulled up. Y'all give me a second to reply to someone asking for the stream on GroupMe before I continue. Oh, I definitely did post it, though. Oh, okay. Never mind. Okay. So, moving on. Kind of same thing we did with 3M, right? We're going to take a look at the earnings per share, dividends per share, all this cool stuff. That earnings per share, nice positive uptrend right there. Same thing with the dividends per share. Got book value right here. There's no data from last year, which is interesting. I wonder why that is. And then sales per share looks like it's also been trending upward. Let's scroll down here. Price to earnings ratio. So we see that price to earnings ratio of that 30.7, and it's a little bit higher now, 5 points higher, at 35.7. Meaning it's, if you're a value investor, if you remember what we talked about at the RNT, it's not necessarily trading at a discount compared to past performance, but that doesn't necessarily mean it's a bad buy. Same thing with the cash flow and the book value. All of these figures have increased over their 5-year average, which also may be a good sign. All these figures are increasing. The value of the stock in the long run is going up. I'm going to zoom back to the chart here. Let's take a look at a longer one. Let's look at 3 years. So we see pretty positive performance as it relates to the S&P. So good stuff there. Moving on. So let's see. Yes. Again, a bunch of data here. Talks about the business sources of value. It's all great. But we're going to look down here. So they have a net debt balance as well. Now it's significantly smaller than that of 3M, but I'd also assume that Costco is not as big a company as 3M anyway. Certainly less segments of business. So we see right here their core membership, or their core merchandise rather, within the United States. So that's going to be their retail stores, right, where they actually sell their products. Same thing, except this is internationally, so not too much change there. It just happens outside of our borders. And ancillary businesses is going to be talking about within. They have, the food court that sells the pizza, the hot dogs. They have the gas station out there. I know some of them have like car maintenance places and whatnot. So that's the ancillary businesses. And then lastly, you got the membership fee, right? You can't shop at Costco unless you pay that annual or monthly membership fee. So we see all these avenues of business right here. And we might think, okay, let's think about this. Without looking at any of the financials, which I recommend everyone does before they make a serious purchase, look at the core merchandise. So look at their stores. We think the stores are going to go up and the business is going to continue to grow when the virus is doing all this stuff and people are forced to stay home and eat their own groceries? Probably. And that holds true for other countries as well. So the core merchandise internationally, same thing. Ancillary businesses might take a hit. Why? They might shut down the food courts within the stores. But the mechanic place, the pharmacy, the gas station, all that stuff is still going to be open. Although because energy prices are falling, the gas station may see a little bit of a decreased revenue because gas is so cheap right now. And then lastly, the membership fee. As people go to their local H-E-B and Kroger and realize, hey, they're out of stuff, I might go and buy a Costco membership to have access to a little bit more of an exclusive place to buy goods that I need for my home. So overall, we might think, hey, Costco could really come out of this a little bit ahead. And I want to own some of Costco's stock. So one of the last things that we'll do on this live stream is we're going to buy some Costco stock. So we're going to go to trade. And let's see what I want to buy it at, actually. This is 3 years. Let's go back down to a year. Oh, went too far. So it was recently trading at around this price level. Oh, missed the thing. Edit. I'm going to change it to that nice dark green color we like so much. Buy. And we'll just say 280 even. 5 in point. Okay, so that's not too easy to see, but y'all get the gist. So at $280, kind of touch this level right here, and let's just say at $280, I want to buy some Costco stock. Because I think through the short term, it'll go up substantially based off of next quarter's revenue numbers. We're going to go to trade. We're going to go to Costco, already pulled up here. Click buy, which is under the ask price. Now we need to determine how much Costco stock do we want to buy. Right, we bought Netflix at about 3.42% of our portfolio. Is that essentially what we want to do with our Costco stock? Why don't we settle on 3%? So $300, which winds up being 1 share. Because 2% would be 2, yeah, it's greater than 5%. I want to do that. So we're going to buy 1 share of Costco. Right here, and I want to buy it at that $280. We're going to do good till canceled. So again, second Costco tomorrow when the market is open touches that $280. This order will go through. It'll try to buy it for me. 1 share of Costco on the assumption that I believe Costco will have better revenue numbers this coming quarter. So confirm and send. We can see right here, yep, $280. I didn't ever mention this before, but commissions are typically always 0 now because commissions are a thing of the past unless you're trading options, which is nice. And we're going to go ahead and send that off. All right. So we have a decent amount of positions here that we went ahead and looked into buying, with the vast majority of our portfolio being comprised of these ETFs, right? These things that track the entire market that we're confident because of the diversification they give us will not hurt us in the long run, so long as we can weather things like this. We can weather these types of market downturns. And then likewise, we want to also make a little bit short-term money, right? Maybe on some of the things that are going on, which is why we bought Costco and Netflix, right? Costco, the provider of food products. Toiletry is basically just a consumer's good area for consumer staples, things that we all need in our everyday lives. And then Netflix, right, which is going to be technology, specifically in the form of entertainment. Everyone's either stuck or forced at home, stuff like that, right? So we can maybe anticipate that Netflix subscriptions might be going up as people stay at home and watch their streaming service a little bit more, and we want to take advantage of that positive price movement. So with that, right at about 6:30, I'll go ahead and conclude the stream. I'm going to check GroupMe one last time. Seems everything is still quiet there. Next time, I do want to try to look at hedging, finding companies that, right, because you can make money when the market goes down. You just need to know what you have to have purchased or even sold. So next stream, we'll go ahead and look at maybe some positions that we can hedge with, meaning that if the market continues to go down, we can not necessarily make some money off of that, but at least stem the losses on our primary positions and things of that nature. So if anyone has any questions after this, I'm going to go ahead and conclude the stream. I'll try to get a video version of this out if you weren't able to make it, or you want to watch it again later, watch the whole thing, didn't see everything, you can go ahead and hopefully do that. Thank everyone who is here for attending, and I look forward to seeing y'all next Tuesday at 5:30.